What's going on, guys? FX Brawler here. In this video, it's going to be a follow-up of my last video, which was called The Four Stages of a Financial Bubble, or The Four Phases of a Financial Bubble. In the last video, we covered the Dow Jones Industrial Average crash of 1929 to 1932-34, and in that zone, and we saw like the four phases of the pattern here, starting with the stealth phase where smart money gets in, the awareness phase where institutional investors get in, the mania phase where the public gets involved after the media have pushed the narrative. And I want to pay a close attention to that phase here, because I think we're close to having the next big bubble into that the cryptocurrency world, and explain my thoughts as to why. And basically, in this phase, when the media attention gets in, it's usually because the price has been able to reach the previous highs that were reached before the last bubble hit. Like the all-time highs are breached, and then the media starts picking up the attention. Enthusiasm gets back in the public. People remember the fortunes that were made in very little time, and they start to get back in, and then eventually greed gets in, and we go into delusion and the new paradigm, and that's when you want to start taking your chips off the table. Then comes in the denial, the bull trap, the return to normal. People are thinking, okay, we're going back to the highs, and then fear and capitulation sets in, and then that's in that phase that we see misery basically hit, and then disbelief from the whole ecosystem of whatever financial product you're trading. And I want to focus in this video as well as into what happens after the pattern, because this is interesting to study as well. This is not part of the theory that was put forward, but I've done some research in that department in the past few years, and I've come to the conclusion that there's another pattern that occurs after, and this is what I want to share with you guys. Of course, nothing happens exactly like it happened in the first place and the first time, but sometimes we can draw some conclusions from what happened in the past and get a general idea of what is going to happen in the future. So what I propose to you today is that we look a little bit in the past of Bitcoin, and we go as far back as 2012 and start analyzing together the behavior of these past bubbles, because this is the perfect asset to look at in order to study these. Because whenever there's a new technology that comes in the market, people are looking for the appropriate price. They don't know how to price it. They don't know the value of it. So we're basically shooting darts, trying to figure, well, I think this is worth that much, and someone else says, well, I think it's worth that much, and then it creates this whole bubbly phase where things get way overpriced or way underpriced as well when there's a return of the pendulum. So let's get started with looking at Bitcoin real quick. So the first thing that I want to cover here is this period here. This is back in 2012, and we see the nice run-up of price, and then there's a huge retracement here, a correction, I should say, of 56%. So it takes a special kind of stomach to be able to withstand this kind of pain and keep holding on. So this is the first time, and what I want you to pay attention to is this the first recovery over here afterwards, the first attempt basically, which gets violently thrown back, and then there's the second test, and in that zone what we're basically trying to do is to test this high over here. Let me put a darker color so you can see better, like this. So this high here is being tested, and this is interesting. This is a nice point, I think, to really pay close attention to what's going on, because whenever you see accumulation at a little bit above a previous high, and it forms this kind of of range that is very tight, but the price is able to hold at or slightly above a previous high after a big bubble like this, it usually means that we've made the price discovery, and we're basically heading to the previous highs, which are over here. And earlier I was talking about media attention, and it's at that point when the new highs are reached again, this is when the media start talking about it again, and the hard believer in the technology start to come out of the woodworks. And they start to say, well, Bitcoin is back, here we go again, and this is going to be the next bull run. And then from there, the price keeps going up and up and up and up, and you have these huge this huge upside potential basically. And what we were seeing earlier, this whole 56% retracement, when you look back at it, it looks like a bleep. It basically looks like nothing happened because it's so exponential, the growth, that this over here looks incredibly insignificant in the grand scheme of things. But of course, when you have these type of returns, high returns in very little time, then you have the correction that occurs after that. And in this case here, the retracement was 82%. Think about that. 82% loss of money. So whoever was leverage, I don't know if there was leverage in Bitcoin at that time, I don't think there was, but right now there are a lot of people leverage, and I think that's going to create two things. First of all, I think it's going to create more upwards pressure when the time comes, but also I think the swings are going to be extremely violent this time around in the next bubble, if there is another bubble. I'm not making any guarantees here. I'm just suggesting that I think we're likely to see another one, and it's very close, and I'll show you why I think that a bit later on. So that's the second big bubble that I can look at in the recorded history, and I want you to pay attention here again to the you have the first try of the correction, and then price goes back down again, and then eventually you have another up move, but this time it's unable to sustain it, and it keeps correcting after that, and then from there price works its way to the previous highs, and this is the important moment, I think. Let me just put this on here, and here it gets rejected at the previous highs of that move. So I would keep an eye on these two highs here, because once these are taken out, then the next high in the line is the previous high, and once that high is reached, a 258 mark in this case, then this is when media starts to pick up the story again, and then we start the whole process of the bubble. So this is all an accumulation phase basically, and here you see we had a big range, but it wasn't able to go higher than the previous high, and it eventually puked one last time before it went to new highs. And the accumulation that I was talking about occurred over here in this zone, and it's from that breakup that the move started to move to happen again towards the new highs. So if we look here, this is the high again that was separating the previous highest high of that time period, and then we saw an accumulation here, and this is what I want you to pay attention to. So this is the accumulation, and then in this phase, this is the high that has to be taken out, and it occurred through an accumulation here again in the form of a pennant, and then eventually it broke out of that, and boom, the rest is history basically, and we had another big run up in the price, and then from there we had another big retracement, and this time around it was how many percent? 67% correction. And then we have the first attempt, which is going to be our next high, and then the other one, and then we're going to pay close attention because now it actually made new lows. So if we go here and calculate that, 87% drop. So we had an 82%, 56% I think was the first one, 82% on the second one, and 87% on this one. This is crazy. So the low of this wave went and reached the highs of the previous one and used that as a support, and that little area here served as the support for that for the next accumulation phase that occurred over here. And then there were a bunch of little waves that did impressive retracements in the 30s and 40s before the next big wave occurred again. And again, these previous bubbles look like a bleep. So this is why I think that with what's going on in the crypto world right now is that a lot of institutional investors who were really against it in 2017 and were saying that it will never work, it's not a good investment vehicle and stuff like that, they've changed now that they have established positions in it and they had time to accumulate whatever they wanted to. Now they've come up with, they're starting to come out with ETFs and products, financial products that they can sell to their clients. And now the average person that doesn't know how to manage private keys and public keys and how to transfer funds, like my grandmother couldn't figure this out, you know, but now they're going to be able to go see a financial planner and say, listen, about that Bitcoin that everybody, that my little children are talking about, I would like to put some in my portfolio as well. And the financial planner is going to be able to do that through some ETFs. And I'll talk about that in future videos. But suffice to say that I think the next bubble will be absolutely crazy, crazier than the last ones, because we haven't seen the ramping up of the institutional investors getting the clients in an easy in and out way, and now in Canada you're able to put this into a TFSA, which is a tax-free account, so that's pretty big as well. So from here we have another bubble, and this time it went all the way to 84% retracement, and then we have the first attempt that I was talking about earlier, and then the retracement from that came all the way here. And if you recognize this pattern from my previous video, shout out to you, because this here is a very important pattern. This is the kind of pattern that I traded silver with and made quite a bit of money on that trade when I bought it when it came back inside. And I've been holding Ethereum and Bitcoin for several years now, and I've gone through the ups and downs, and I just held on. And I'm glad I did, because now it's a significant percentage of my portfolio, and I think it's the potential for profit is so asymmetric that you can really make a lot of money in little time once it gets going. And this is what I want to talk about specifically today, because the highs have been reached. Like, this is the high that needs to be beat over here. And what we're seeing here is that the price is not accumulating yet above that high. But what we're seeing is that we have full bodies that are accumulating inside of the range of these previous candles that were rejected. And this is a sign of a certain strength when price is able to accumulate at these prices. It doesn't exclude the potential for this to go straight down one last time. Because we already have a 1, 2, 3 up wave pattern, so it's possible that it either comes back to test this trend line here, this support, or it could break and come back down and give me one final opportunity to buy more, which I would really like for it to do. But I'm not entirely convinced this is going to be happening, because we haven't seen 14,000 in Bitcoin in several years now, and because of what I was talking about there's a lot of very rich people and important people in the financial industry that say that Bitcoin and cryptocurrencies are a good hedge against what's coming in the financial world with inflation that's going to come around the corner, hyperinflation in some cases, and the whole financial system and the agenda of some of the big bankers of the world that are trying to push forward a narrative of having some type of stable cryptocurrency. And I wouldn't be surprised for that in order for this to happen, they would have to have some kind of global acceptance of digital money. And I think this is probably a good way to get public acceptance to have people go towards Bitcoin and Ethereum and Litecoin and the likes. There are thousands of coins at this point, but not all of them are. The vast majority of them are really crappy, and they're what are dubbed shit coins. So I wouldn't touch those, but I think Bitcoin and Ethereum have really a good potential for holding power, and I've been mining Ethereum for several years now, and I think that if we reach this high again, if we're able to close on top of it, and we see some type of range occurring in this zone here, if there's a break, I'm going to start buying again. I've just accumulated my a big stake into Ethereum as I was mining through the up and down of this wave, and for the past few years I've been mining this and accumulating. But I think that once we form some type of continuation pattern on top of this high again, I would hate myself for not buying more rather than just what I'm mining, because I think this is going to be a great opportunity, and the potential for upside once it reaches this previous high here that is close to the $20,000 area. I think this will be a very good reason for media to catch back the whole storyline of cryptocurrencies in a world where the governments are printing a lot of money to try to save the economy. So this is what I wanted to bring forward to you guys. I'm going to do a few more videos on the subject, because in the next videos I want to do like a really quick tutorial on how to deal with cryptocurrencies and which brokers I use to trade in and out of that, and how I store it, and how to cash out of it as well specifically into Canadian dollars, because I'm in Canada. So stick around for those, and I'll see you in the next one, and don't forget to like and subscribe, and I'll see you soon.